Good day, YouTube. Here I'm back again with another short video. For those who like my content, please do like and subscribe, and leave any comments if you have anything to comment. So what I'm going to be looking at today is the concept of I'm going to be looking at the concept of trend bias. Trend bias, basically what I'm talking about is the general direction in which the market is flowing. For example, if you look at this GBPNZD, I have a trade running on this one. As you can see, it's going up. Generally it's been going up, so you can see this is an upward moving channel, right? So basically it's been generally going up. That's a general flow of the market. Even if we do zoom in, like this, you will see that even here the general flow is upward trending. So it will be good. I think these it's very important that you understand that a trending market is always the best to enter into in terms of profitability. So you find that when you trade into when you trade with the trend, you're likely to get a better result, and you're likely to be more profitable. So for example, I'm just going to look at this market here, the GBPNZD. Like I showed you, it's showing that it's generally a bullish trend, and so here I'd go to this high over here, then it started retracing. As you can see, it started going back like this, but it hasn't changed the direction of its trend. So basically I've been looking for buys here, and as you can see, I have my previous high, significant high, which was broken, which is this one. I have my line cutting across there, so you can see as a point of interest. Then these lines, as you can see, the horizontal lines that are here, these were also points of interest that I have on my chart. There's Fibonacci and an EMA, but I'll talk about the Fibonacci later on in another video. So basically my expectation was to find a bullish, like a buy, because since the market is bullish, it's going upward, right? Like the general direction is going up, so would want to trade with a trend. So I just looked for a place where I could get a buy. So maybe for some people they could have wanted to buy from here, but for me there was no confirmation. There was no divergence. You call it divergence, right? Where you have not divergence, confluence, exactly, where you have a couple of confirmations that come through. Here there was only one, there wasn't anything here, and then down here as well there wasn't really much. So another place where I was expecting this to happen was probably at this psychological level, the 2.0500 line here, but it didn't happen there. But then it came and it hit my previous high, this one that I said that was broken the last time. So that's when I got a bit interested, especially with let me remove this, especially with what was going on here. This slowing down of the market here shows that at some point it has to start moving up again, and then here again there was that slowdown there. So seeing that, I could tell that the market is about to, at some point soon, it's going to start moving up. And then when it got to this point here, right, let me just highlight with this point, right? This is a flow. As you can see, my previous high that was broken, I used that as a flow where the market did react. As you can see, this candle here, and we do have bullish sort of engulfing candles here from yesterday. As you can see, showing that there's now bullish momentum back in the market. And as you can see, it's been ranging in the same place for a while now. For how many days? 1, 2, it will be the third day. So that means that the bearish market, the bearish players are losing interest, and bullish players are now coming into the market. So my confirmation came after seeing these two candles. That's when I decided to go for my buy, and I took my buy in on the 15-minute, and let me show you what basically I took it or GBPNZD as a as a 6 pip. So there we go. It was actually too much. It wasn't here. It was somewhere around here. Actually, I think it was somewhere around here. Exactly. Yeah. So there we go. That's my trade over there, and I was targeting all the way up here. Basically, I'm looking forward to go all the way back here. It might take maybe up until Friday, but that's the final target. My TPs as usual. I have a couple of TPs in here. Here will be my first TP. Here will be my second TP. Around there. Right. So basically, what like I said, this video is going to be about trend bias. Right. In this sort of case, with this sort of trade, I am confident, quite confident, that it will play out in my favor. No matter what happens to the market, I am likely to hold it, waiting for the upward move, upward push. And as you can see, also there is some sort of it's a weird looking head and shoulder here on the 15-minute there. So with all those confluences and seeing that my general trend bias is bullish, I decided to take this trade. And since I'm trading in the direction of the bias, I am more confident. So basically, what you need to look at is, first of all, identify your market bias, whether it's bullish or it's bearish. Because yes, we do have our strategies and how they work, but it's always important to look at the market bias, the trend bias, because you might be in the 15-minute and you're seeing bearish, but then the market bias is bullish. You see that's when you get taken out a lot, and yeah, and you just you get into these silly losses, and you don't understand why, because your setup was there, you could see it, but the problem then was that the overall market bias was bullish, whereas you were seeing bearish on the smaller time frame. So it's always important to look at where the market is going. So if you really want to do it easier, you go into the daily charts and the weekly charts and the monthly chart. That's when you see what the market bias really is. But I can identify my market bias on the 4-hour, because that's where I work the most. So yeah, that's it, guys. Always do your best to trade in the direction of the market, the direction of the market bias, because counter trend trades, they have to be very short. Usually they are short. It's like a short period trade, whereas when you're, like, for this case, in this instance, in this scenario, buying here, I would be happy to hold it for the next 2 days. I'm not exactly an intraday trader. I'm more of a day trader, but in this case I would be happy to hold it because I know that this is the general market bias. Yeah, so guys, that's all. Just try to trade as much as you can in the direction of the market bias. So yeah, that's it from me today.